Investors and traders, welcome to the channel. Today is 30th of April 2024. I hope everyone is having a great day. It's incredible that today is the 30th of April, the last day of the month, and the April has already concluded as far as the markets go, which means that we'll also get a chance to take a look at the monthly charts, which we will do in this video briefly, and we'll take a deeper look at these in our weekend review because we have more time to cover more ground. As always, this video is for educational purposes only and is not a financial advice. And we'll start by taking a look at the chart of Bitcoin versus the US dollar, something a little bit different to our normal start. It's really important in my view to actually start to take a look at the Bitcoin because it has had a tremendous run and it has been outperforming a number of assets. However, it's something which I'm trying to understand, and I'm not a very crypto person. I have some fundamental knowledge of crypto. But an event happened in Bitcoin, which is called the halving on the 19th of April. And the way I understand is that with halving, the supply is reduced. So if the demand is there and supply is reduced, then theoretically, per my whatever my understanding is, that should actually help the price move higher because the supply is low and the demand is greater. So from a technical perspective, what the Bitcoin is doing at the moment is really at a critical level. It's actually testing it for the second time. And the $60,000 per coin level is the 38.2% retracement of the lows of January 2024 to these highs. I believe these were the all-time new highs in the Bitcoin. And also it is the one-to-one price projection, the ABCD, although I've not labeled them as ABCD. So when we have a confluence of two or more patterns or ratios coming together, something we pay really close attention to. So if the Bitcoin price begins to move lower, it means that there is more selling coming in, and that could also impact some other asset classes as well. So this is why we need to follow Bitcoin as well, in my opinion. And I'll begin to cover more Ethereum and Bitcoin in some of the videos that we do, and probably cover a little bit more of crypto as well, because this is some asset class, especially with the Bitcoins, with the rise of ETFs coming in. It is something which a lot of bigger guys are paying attention to as well. And the other thing is that let's take a look at the stock of MicroStrategy. So this is the company of Mr. Saylor, Michael Saylor. He is big on Bitcoin. I've seen some of his interviews. This is what I've understood. And his company holds a lot of Bitcoins, and this is why we have seen a meteoric rise since 7th of February 2024 till 27th of March 2024. This short span of time, a few weeks. The stock has risen from about $500 to $2,000. That's an incredible run. But now what we are seeing is since the stock put in a top on 27th of March 2024, it's just been declining, and it has been taking out some lows which could have been support here. So just really support and resistance, simple stuff. And today it actually closed below this low as well, so which could trigger a possible ABCD. If we just take this and we project it from here, so which could actually take this stock all the way back to about $500, so back to the lows of around here. Whether that will happen or not, I do not know, but the momentum is not positive for the stock, because we can see the 8-period moving average is below the 20-period moving average, excuse me. So we need to be also watching this one. Okay, so with that, one more thing I want to point out is we'll just take a look at this website called the forexfactory.com. They have a nice calendar here. So just wanted to show you what sort of economic news is to be expected for the 1st of May. So it is a bank holiday in China. it's a bank holiday, French bank holiday, German bank holiday, Italian bank holiday, so the European markets are likely to be quieter. And then in the US, we have some big economic events happening 1st of May on Wednesday. So 1:15 p.m. Because I'm based in the United Kingdom, this is my time. I believe it is 8:15 in the morning, New York Eastern time. So it's ADP non-farm employment change, and then we have the final manufacturing PMI come in 3 p.m. my time, which I believe is what 10 a.m. New York Eastern time. We have the ISM manufacturing PMI, jobs opening, and ISM manufacturing prices. So the ones which are in red, these are economic events which usually have an impact, and we see prices fluctuate quite a bit. So usually this brings a fair amount of volatility. And the big one, 7 p.m. London time. I don't know what's gonna be in New York. We have the federal funds rate and FOMC statement. So the Federal Reserve Chairman Jay Powell, he'll be making a statement about the federal fund rates, which is coming out tomorrow, and the FOMC statement. Now, looking at some of the data, the possibility for a cut for interest rates, the market is now pricing it towards November, which is after the elections. And one of the things is that I believe, in my opinion, the Fed will just not change anything. And what will be important is to actually watch the statement coming in from chairman, because if the statement is going to be dovish, that could make an impact, or if it's going to be hawkish, that will make an impact. I do not, if the central banks are very conservative, so the recent rhetoric has been the Fed is actually dependent upon the data, and some of the inflation figures have been coming in pretty hotter than expected. So if they were looking to reduce the rate or do a rate cut, I think they would be building up some rhetoric about it. So what it means is that if there is going to be a cut, that's going to be a pretty big surprise, since the market expectations are in November. So we'll wait and see what will happen, but these are just my thoughts on what could happen. Just be aware of this big event happening tomorrow. Now we'll take a look at the 2-year Treasury note, and this is something which we have been watching closely, and what we can see is the yield is a little higher than 5%, so that's something to be noted actually. And then let's take a look at the longer term 30-year long bond futures. This one seems to be in our trading range, so the yields are fluctuating a little bit, but if the price begins to move higher, then on the longer end the yields are likely to fall, because there's an inverse relationship. It's stuck in a range, but we are clearly seeing on the shorter end that there has been a spike above 5%, slightly above 5%. And then if we look at the 10-year Treasury note, so this market is actually bigger than the long bond futures market. Quite similar kind of price action, sideways trading, but still holding above these lows here. Okay, so now what we'll do is we'll begin to take a look at the dollar index. So this is a chart of dollar index, the daily chart, and here what we can see is that the dollar is actually very strong ever since it has hit the 38.2% retracement on the 26th of April 2024, so that is last Friday. Now we had been looking at 107 as the possibility, but it really needs to get above this 1.618 expansion, and essentially this price zone that I have mentioned here around the 106 level here. But with the dollar being this strong, there's a possibility it might just go for the 107 level around this top here, which would also mean it'll just go slightly above this wedge top as well. So we'll be watching this, although we were looking for a weaker dollar, but 107 level is key. I think if it goes above 107, then we have this chance that what we were also looking at on the weekly chart, it could go as high as 108.75. We have ABCD and the 1.272 expansion. So we are watching the dollar really carefully, looking at the gold. This is going to be the daily chart of COMEX gold. With dollar up, the gold is down. That's the commodity being a little bit higher in price is kind of expected. But we have also seen the dollar being fairly strong and gold being fairly strong as well. So that's a very interesting combination. I don't know what the reason might be, but it could be that money is moving towards safety, and during periods of crisis, US dollar is perceived to be safe haven, and so is gold as well, but not always, because at the beginning of a big crisis we have seen actually gold move lower, and that could be because when there is a lot of volatility, people who have been trading on margins, big firms, they begin to get they need to put up more collateral because the margin requirements can go higher, so they'll just try to sell some of the assets. And if they have been holding gold, they'll just sell that to raise more cash to put up for some of their positions as the requirements change and higher margins are needed. That's one likely explanation. But what we are looking at is, look at this. This candle is opposite of what we saw in the dollar index, and it's a pretty big candle as well, and it's negative. So it's from a candlesticks perspective, this kind of candle is called Moriboso, because it has no upper wick and no lower wick, although in this one we see a slight wick, but that's negligible. So usually when we have a Moriboso candle, what it means is there is likely a follow through in the same direction, because it's a pretty strong trend indication. This is the kind of candle which we also saw on 22nd of April, and then we did have a follow through, then a slight rally. Now I'm going to move to the 15-minute chart, so this is going to be really shorter term intraday, and here this is the pattern that I had actually shown you before, because this was this one-to-one price projection ABCD right at the 38.2% retracement. And whenever we have ABCD formation with 38.2% retracement, the market actually begins to follow this in the direction of this the pattern, meaning that here it was a bearish formation. So the market, look at today, it's just been going down so quickly, so rapidly, and which means it's a stronger resistance because of 38.2% retracement with ABCD formation. Stronger bearish trend is in focus. Now if we were able to get above this 38.2% retracement in terms of levels, get above 23.65 on closing basis, then this pattern would have been negated, and we could be looking at higher highs or recovery highs at least to go and test this all-time high one more time. But with this kind of prices action, looks like gold is moving into a correction. And mind you, let's actually take a look at the weekly chart as well. If there's a possibility it can come down as low as about 2210 or 2200 roughly speaking, which is the 38.2% retracement, and also from the symmetry concept, it will be the equal move. A really longer term on the monthly chart, here we go, let me actually blow it up a little bit. This is the month of April, which just concluded. We can see a run to 2700 is also possible for the gold market, and not really a fan of the candle that formed, because a fair amount of selling happened or profit taking to bring it down, but nonetheless it was a positive close for the month of April for gold. Okay, now let's take a look at the stock market indices for the US. Okay, so let's start with SPX. So this is going to be the daily chart of S&P 500 cash market. Here, I did not do a video yesterday, but one of the patterns that we were watching for was this ABCD, and on 29th of April, this is where the market actually went. And there was I was thinking that maybe it could go as high as the 61.8% retracement. I'll show that on the futures chart, which in fact would have been better for the bulls, because it means the market was able to retrace a fair amount of this decline, so it went deeper into it. But there's a possibility, of course, that this 50%, which is not a Fibonacci retracement as well, was a much stronger resistance. Now, there's one possibility that this might actually be a because we have this gap here, a gap fill. So let's try to take a look at this from a volume perspective as well. So this is the gap bar. So if we just look at the volume on this one, it was about I think it's in millions, but what is showing me is 4580, and today it has been higher, so 4597. So if this move would have happened, on a lighter volume, then there was a chance that maybe it was just a gap fill. Of course, that remains a possibility, because tomorrow we have the FOMC, and if there's going to be some news which the market likes, then the market, yeah, it could erase about 100 points and maybe go higher to 61.8% retracement. That remains a possibility, but the market will have to do a lot of work. That is 100 points, that's about 1000 Dow Jones points, and to get to 61.8% is even higher, so that's a lot of buying pressure that will need to come in. So that remains to be seen. But what we have in front of us, it has retraced 50% of this move and also closed the gap. So let's also take a look at this on SPY as well. So on SPY, we see the same thing, what we saw in SPX. Today's volume is higher than this gap day volume. So perhaps it might not be just a gap fill day. So we just need to consider this. And tomorrow is FOMC day, and also it is the beginning of a new month, and normally around the end of the month and the beginning of the month we have the money coming from funds to be invested in the markets, etc. This is basically your pension money coming in, IRA and stuff like that. So normally that sort of region, end of month, beginning of month, is where usually a buying comes in. So with that in mind, let's now move to QQQ. Excuse me. So here I'm going to take you to the weekly chart for the QQQ, and then we'll come to the daily chart. So for the new subscribers, welcome to the channel. And recently we have not covered the QQQ in our tech videos where we cover the technology stocks. I think I should cover this as well, but in the past we have. And on the weekly chart on the QQQ, which is the Invesco trust for technology stocks, we were watching for this ABCD, which pattern one-to-one price projection, which you see in blue, and then this 1.272 coming around 450, and the market just went very close to it. I believe the high was 449 and 34. So what it means is that this pattern was completed, and sideways price action for a while, then a big move lower. Support comes in around 408, which is also the structural high, and also the 38.2% retracement, and it's not too far away from the lows which formed on the week of 15th of April 2024. Now let's also take a look at XLK. I don't know what is the difference other than the supplier being different. XLK is Spider and QQQ is Invesco, but maybe one of them is more popular than the other one. We also had a similar pattern, but it wasn't completed to the extent the way QQQ one was completed. So we were looking for about 216 with the possibility of maybe slightly higher. We have this big ABCD completing with the black line around 220, 221. The market reached as high as 212, so it was fairly close to our 216 level. And then of course we have seen it move lower, and now where it is basically it is testing the 38.2% retracement of this entire decline rise from 23rd of October to the recent highs of March. Yeah, it's a slightly different pattern to the QQQ, and what we have is some structural support coming in from the December highs as well. So again, it, in my opinion, was also, the pattern was completed, although we missed the exact target, but in QQQ it was much better. Now what we'll do is just one more thing I wanted to also show you before I forget. Let's move to the QQQ and move to the daily chart. We should also look at the volume in QQQ just to make sure that this gap situation. So this is the gap day, and the volume was 349. I believe these are in millions, but this is what it is telling us. But what we are really interested in is whether the volume today was less or more. It was actually more. Had it been lighter volume, let's say about 20-30%, then the chances would have been more, in my opinion. That was a gap fill, but it might not be. But we'll also keep that possibility in our mind, back of our mind, because it could be FOMC days tomorrow, and we could see market turn around, because also the end of month or beginning of a new month. Okay, so with that, we'll now take a look at the futures. So just really quickly want to show you the futures. This is the S&P 500 E-mini futures daily chart. This is where we were looking for this market to go, which is 51.90 level. That possibility is there, but the market will have to do a lot of work to get there after this kind of a move that we have seen, which came from 50% level. So this was our 38.2. I'm going to remove this, and you can see it came exactly from the 50%. So one possibility remains this ABCD as possible. The other one is to make test these lows, maybe slightly lower low, and of course there's another one that this was the low, so that remains to be seen. So here what is really key is where the market went today. What did it do? So we just come and draw this. One thing is really clear today. Let me actually try to blow it up a little bit, and that is the market actually closed below the 38.2% retracement, okay, which came in around the 50.83 mark, 50.82. So that was pretty bearish, because it took out the lows of 29th of April bar, lows of last Friday 26th of April bar, and now it's just testing the midpoint of this candlesticks wick here. So again, needs to be seen what will happen here, and it's really critical week, this week, beginning of new month, and of course FOMC day. Now if we move to NQ, so just to reiterate that going below 50.81 is actually bearish, in my opinion. The momentum is already bearish. If we move to NQs, this is the daily chart for the NASDAQ 100 E-mini futures. We were also looking for this to go up as high as 18,000, maybe slightly higher to 61.8% retracement. This move came in just shy of 18,000 from 50%. And here again, what we can see is we don't see any gaps here, but we do see gaps on the QQQ. This is why we took a look at the cash. And here again, from a retracement perspective, this one has clearly broken below the 38.2%, and it's now right at the 61.8%. So if we begin to move lower than 61.8% retracement, then the chances are that what we were expecting for this to go slightly above 18,000 might not happen, and this 50% is point B, and we could have an ABCD lower as well, right into this target zone that we had been watching for. So we could have something like this take place. That remains a possibility. In fact, I can actually move these like this, because this is what we have seen thus far. So that remains a possibility, and tomorrow is the big day, just reiterating that because of the FOMC. Okay, Now let's have a quick look, because the video is getting really long, for the Russell 2000. Here we go. So this is Russell 2000. Actually, we had been looking for the Russell to move higher to as high as 2070. Now that is A point, B point, C point is still there. It's not taken out, but it's again been a pretty massive move to the downside. So we are just watching for this one. Maybe this pattern formation actually also not materialize, and this move also comes from the 50% or nearly 50%. So I'm just gonna move that. Actually, there we go. And finally, last but not least, we have the Dow Jones futures. It's really testing its possible C points, so A, B, C, D. So point C, going below this C point, which is the 61.8% retracement of this one. Let me just get rid of this so it's more clear now. You know, that sets up a possible bigger ABCD like this, which could happen. And of course, the three scenarios that we have discussed in the S&P 500, the SPX, also are applicable here as well. And it's possible that we might not get a correction in the form of ABCD. It might just go and test these lows, slightly lower low. Maybe this was the low. We'll have to wait and see. But today's close is pretty negative. And then if we take a look at the NYA, which is New York Stock Exchange Composite Index, it also includes ADRs. It is also doing something a little bit different, because we were looking for it to get up to 17,950. That may not happen because of today's price action, which came in from I believe it came in from 50%. Yeah, exactly 50%. So that is something to be aware of. So guys, thank you very much for watching the video. It's been a little bit longer video than I thought of, but I really appreciate that you guys watch the videos and comment on it as well. If you like something, if you want me to cover something else, like new stocks and stuff, please do throw those ideas. I really appreciate your input. Thank you very much for watching the video, and if you like this video, give it a thumbs up. If you like our analysis, how we look at the markets, think about subscribing to the channel. And as always, good luck and good trading, and speak to you guys soon.